Next up, David Charles Allen. He's a realtor at Village Properties and host of The HOP, that's Home Ownership Podcast, It's a Beautiful Life. He's going to tell us what's happening in Santa Barbara's real estate market. Hi, David.
Hey, Patty. Welcome to The HOP.
Yes, it's great to be back with you.
Great to be back with you today. How are you doing?
I'm doing fine. Thank you so much.
That's amazing. So we'll jump right in. Let's celebrate this week's weather. We're looking ahead some partly cloudy days, and it looks like to be some rain on the horizon with a potential for showers for the next week or so with temperatures in the mid to high 50s.
Ooh, that's chilly, isn't it?
It's a little chilly, and it's great that we're getting some rain. So we are appreciative of any rain that comes our way.
Absolutely.
We've had a great run of surf starting this year off, with some people saying it was one of the best in quite some time. There should be some more coming in, but it's really going to be dependent on the amount of wind and what direction it's coming from. With the storm off of Mexico, we had a couple days of choppy surf, even though there should have been good swell, given the direction of the wind coming from the south. So enjoy yourselves out there. If there's some fun days to be had, go get them.
Yeah. Have you been able to get out there, David?
I did. I got a couple days past like a little while ago, but I hurt my neck for a little while. So I was kind of out of the water. So enjoying from afar. That's
yes. Yes.
So we'll continue with how the mortgage rates are performing. As always, I want to start off by saying mortgage rates have been shifting daily, sometimes significantly. There are a multitude of factors that could make a person's interest rates go higher or lower, depending on the program they use, as well as the personal financial history. So interest rates this week are at 2.875 for conforming 30-year fixed, and equally the same, 2.875 for non-conforming jumbo 30-year fixed.
And the market's still hot, right, David?
Market's still hot. I've also seen a couple clients of mine with interest rates down at 2.5%, 2.6%. So it really is going to be dependent on who you talk to and what your financial history is and everything like that accordingly.
Yeah. I read an article that while interest rates are low, your credit score is really expected to be very high right now, in particular, more than usual. Is that correct?
Yes, they still want a really good credit score. The loans are getting more strict in terms of who they lend money to. The underwriting process is a little more stringent. So maybe even just a couple of years ago, you might be able to get away with some more lax financial history or proof, at least. And they're becoming a lot more strict in that. So that was the main reason why we had the mortgage crisis back in 2007. They were basically handing out loans with no proof of funds, no money down. A lot of people say it could be another bubble like then. Well, it's not going to have to do with loans from our standpoint or mortgages, because they have become so much more stringent. If there is something like that to happen, it would be of a different reason. So we can lead with the stats of this week. There's 15 coming soon listings. There's 44 new listings, 35 homes that closed, and 30 that were pending. This is great. It's probably one of the biggest new listing weeks we've had in this new year. And what's also great in terms of buyers is that there was only 30 pending. So the last months that I can remember, they were pretty even, if not more. So that means we're gaining a little bit of supply, even though it might be small, 14 homes or condos, we are gaining a little traction on that point.
That's good. So you have something to show your clients. And if somebody's listening and they don't already have a real estate agent, can you give your contact information, David?
Yeah, it's David at davidcharlesallen.com. If you want to email me, or phone number works as well, 805-617-9311. If you want to read more about me, you can check out my website at davidcharlesallen.com.
Sounds good, David.
And I also wanted to kind of talk about maybe a correction on the bubble and what that means with interest rates. And so I have a client that I've been working with, and we're kind of discussing if there was a correction and the interest rates were to raise, what's kind of the difference in the cost. If we're taking it right now, the interest rate he was able to get was 2.6%. And if he's investing on $1 million home with 20% down, the monthly payment with 1.1% taxes would be $4,260. The down payment with closing costs would be $215,000. And over 30 years, the total paid would be $1,353,000. Now, in retrospect, if we look at it with a 10% correction and say the purchase price is $900,000, but the interest rate were to go up 1% to 3.6 and the same 20% down, you're looking at a monthly with 1.1% taxes at $4,225. The down payment with closing costs is $194,200. And over 30 years, total paid is going to be $1,358,000. So in retrospect, there's only a $35 monthly difference in mortgage payment. If there was a 10% correction with a 1% increase in interest, there would be a $5,000 difference in total paid over 30 years. And the down payment is the big one. It would be a $20,000 difference. But if you factor in what you're probably paying for rent over that year that you're not in a home, that $20,000 difference is almost negligible. It just kind of shows about a 1% interest and $100,000 difference is basically equal. So who knows if there were to be a correction, if the interest rate would go up, who knows if there even is going to be a correction and if the interest rate might go down more. So it's just a good kind of thing to talk through with people and give them examples of how they see the market going and say costs can almost be similar if this were to happen and this were to happen. So it just gives people more confidence in whether or not they want to purchase at this time or kind of wait it out.
Yeah, thanks for crunching those numbers. That's really interesting. So thank you, David. Any other news in Santa Barbara, or you think we've pretty much covered it?
In terms of real estate, I don't see anything else in particular. We just kind of got to wait and see what's going on with everything. There's still really low supply in terms of housing that's in demand. Wow. We might get new listings that are coming on. There's a lot of new high-end listings coming on. We really haven't got supply of that mid-tier 1 million or 800,000 or 1.5 million.
And hopefully as springtime comes, that's usually the hot time in the real estate market, isn't it? Where a lot of people put their houses up for sale.
It is. A lot of people will start listing their homes more often in a typical year.
Hopefully things will start to settle down and the real estate market will, well, it's still good. More people will feel comfortable selling their homes and the inventory will go up. That would be great.
Yeah, we look forward to it, Patty.
Okay. Thanks, David.
All right, let's give it a go next week.
Take care. Bye-bye.